Welcome back to Cheddar, everyone. I'm Kristen Scholler. Well, look, the rich are only getting richer, but you might not be able to tell looking at some of their tax records. ProPublica taking a closer look at the noticeably low income tax paid out by the 25 richest Americans, and in some cases, you will not guess this, it's $0. So joining me now is Jeff Ernsthausen, senior data reporter at ProPublica. Jeff, thank you so much for joining this afternoon. Talk to me more about what you discovered in your reporting and how it is possibly the case that an average American might be paying more than the richest Americans out there.
Thanks for having me. So our story is about a relatively simple point, which is that when typical Americans who earn salaries or wages, take an income and get a paycheck, part of that is automatically taken out for taxes. For the typical household, that might be 14%. But for the ultra rich, it's a completely different picture. So most of their sort of economic income is in the form of growth in the value of their assets, and unless they make a decision to say sell a stock, they're not facing taxes on that. And so over time, that means that vast fortunes can be amassed without hitting a sizable tax bill. And so we looked and we found that over a 5-year period from 2014 to 2018, the 25 wealthiest Americans today saw their wealth go up by $400 billion. And in that time, they paid only 3.4% of that in taxes. So basically, there's two systems, one for folks who are taking in wages and one for folks who are holding wealth.
Mm-hmm. So I'm just curious, Jeff, how did you go about collecting this data in your reporting?
I can't talk any further than what we've put in the story about our sourcing, but we have obtained the tax information of thousands of the wealthiest Americans. We're talking the 1% of the 1%, and we've carefully verified the information so we know that it's authentic.
Now, break down, I think for viewers it'd be helpful to understand, for the wealthiest Americans out there, wealth, for instance, technically in this case is different than income, right? Their income can be taxed, but their wealth, whether it's real estate or stock market gains or money tied up in their company, that isn't taxed at the same rate as income, right?
Correct. So there's sort of a couple of things at play here. So even if you took the really traditional measure of income, what is reportable to the IRS and taxes divided by that, the wealthiest still pay a relatively low rate because they're not taking in wages and things like that are taxed at the highest marginal rates. Capital gains are taxed at lower rates. But when you step back and you look at wealth, which for them is kind of the more operative thing, you got to realize that it's possible to borrow against wealth the way that you can borrow against your home, you can borrow against your stock. And so the operative thing for the ultra wealthy, the way they're really bringing in money is through the growth of their assets, and they do have access to that. They can borrow against it, and sometimes this comes out in SEC disclosures. For instance, you can see that Elon Musk has borrowed or has pledged tens of billions of dollars of his shares against personal indebtedness. So it's not as though they don't have access to that money unless they sell it or something like that.
So, Jeff, I think that this report probably is catching a lot of Americans off guard, that the richest people out there by wealth are paying less in taxes, taxed at a lower rate, for instance, than some of the average Americans. And even on a nominal basis, right, in some cases, the average American has been paying more than some of the richest Americans out there. What's the solution? Does this reporting give any credence to calls that we've seen on Capitol Hill for a wealth tax, for instance?
I think what our reporting has shown is that the conversation, when it's limited strictly to marginal tax rates, is not capturing the entire picture. And so I think what we're highlighting is that that may have an effect on some of the wealthiest and broadening the tax base in that sense to cover them more. But if you're focused solely on marginal rates, it's going to there's a huge part of the picture that's just missing from that discussion.
Mm-hmm. So what do you think is the solution here? I mean, marginal rates, obviously something that you're highlighting, but what needs to be the conversation that we're having so people have a better understanding of this, and maybe so that some of the wealthiest Americans out there are taxed, for instance, at a higher rate?
Yeah, I mean, I would say that we're not an organization that does advocate specific policy solutions, but we do think that having the information and having this information is important for informing those who are having those discussions. The American people, as well as their representatives, are talking about tax policies now and talking about infrastructure policies, and we think this is an important piece of the puzzle for people to sort of have those discussions.
All right, Jeff, we got to leave it there. A fascinating report. Thank you so much for taking the time to join the show this afternoon. That's Jeff Ernsthausen, senior data reporter at ProPublica.